the coronavirus, stay-at-home orders, lockdown, canceled schools, dramatically rising unemployment. What does all of this mean? Well, this is the second Insights video for the Chong Miller Group. This is for April 2020. And I am Justin Miller. So I want to talk about a couple things that are going on in the marketplace right now. Generally, right? Not specifically a market update related to real estate, but rather some background information so that we can all talk about and understand what's happening around us, how that is spilling into the real estate market. What's going on today on April 15th of 2020 and how that's impacting directly from the mortgage market into the housing market. So over the past 2 days, we have seen a number of banks change the underwriting guidelines for the availability of mortgages. At Chase, those guidelines were increased to minimum credit scores of 700 and a minimum 20% down. Now that's Chase Bank. Chase Bank is not the biggest lender or the most competitive lender in the mortgage market space. However, there have been a couple of other banks that have decided to duplicate that. There are no particular requirements coming from the government in the decision of what actually constitutes a conforming loan that says these are the important new guidelines. And so some lenders are not going with such a restriction on who may qualify for a mortgage. But right now, that's what Chase Bank is doing. And there's a few other lenders that have decided to duplicate that. That's cut the availability of mortgages to home buyers. Now, that's actually as of mortgage applications that are written this week, but over the past few weeks, there have been a significant number of changes, increases, some decreases, increases again in the qualifying standards for who qualifies to take out a mortgage. And these are rippling across the housing market in unfortunate ways. So one of the ways this is rippling across the housing market is people falling out of qualification for a mortgage that they had thought they were going to be able to obtain. And consequently, that's causing people to fall out of compliance on the purchase agreements that they're entering into. Now, the Las Vegas realtors have come up with a partial solution to this. It's called the coronavirus addendum. It adds some period of time to an open escrow to allow for best efforts to try to cure some of these defects that are occurring within the confines of the residential purchase agreements as they're being executed right now. Sometimes those best efforts are insufficient, and so contracts are still failing, right? And they're failing at non-inconsequential rates. They're failing at significantly elevated rates from what we would normally expect to see. And so actually so far this month in April, we've seen 1,160 homes go into contract, and we've seen 564 of them fall out and come back onto the market. This is over the first 2 weeks of April, a combined rate of almost 50% of houses going into contract are falling out. Now, those are likely not the same contracts that are falling out right now, because this is actually something that's manifesting itself over a longer period of time, right? You may get to that fourth week when you thought you were going to be closing and you need an extension. You get the extension and you get, another week or two into the extension, and you realize this just plain isn't going to work. I can extend it forever. It's not going to work. And so cancellation occurs. So many of these contracts being canceled are at the 4 to 7 week time frame when these deals are collapsing. Now, that said, not all deals are collapsing. Now, there are other unintended consequences to the responses we're seeing to the coronavirus. Even if some of these unintended consequences seem obvious that they're absolutely going to happen, they're still unintended. They're still not the reason for some of these governmental actions that are taking place. And so one of the governmental actions that's taken place here in Nevada has been the governor has issued a stay-at-home order about a month ago now. And that stay-at-home order necessitates non-essential employees not going to work. Also, school closings were issued just about a month ago. And so students are home. Where are the unintended consequences? Well, unintended consequences are dramatically increasing levels of unemployment. The governor never really wanted to have dramatically increased unemployment. Rather, what he wanted to do was he wanted to create social distancing. That's in the current environment, something that's pretty important. And unfortunately, though, there is a follow-on consequence to that. Now, some of the things we believed were going to be coming from the federal government were going to alleviate some of the unemployment issues that might come from these stay-at-home orders. Because the federal government has been very slow to issue loans and grants under the Paycheck Protection Program and under the EIDL legislation. Unfortunately, this has manifested itself not as people being transferred from one sort of employment pool to another, but rather onto the unemployment rolls. And there's been difficulty getting some of those unemployment benefits issued and up and running as well. But let me tell you this, while many people have become unemployed, first-time filings for unemployment actually over the past 3 weeks, we'll get a new number tomorrow. The new number tomorrow on Thursday is likely to be as bad nationally as well as here locally as it has been over the past 3 weeks. But over the past 3 weeks, we've actually had a number of first-time filings exceeding those of the entire past 2 years here in Clark County. In fact, in the state of Nevada. And so we see dramatically increasing levels of unemployment. We've not yet gotten the full rollout, the full implementation of the governmental response to this induced spike in unemployment, but it's coming, right? And it's terrible to say to somebody who really needs money right now to buy groceries or to buy medicine or to pay a car or rent or insurance that hang in there, but it's coming. It should come within the next probably 1 week, I would imagine. The unemployment benefits that have been created at the state level do not change except to extend eligibility for longer periods of time. But now there's also a federal unemployment compensation program issuing $600 per week. That's not income qualified. So if you are on unemployment, you will get the additional $600 per week federal unemployment assistance. Now, what that means is in Nevada, you might get between $200 and $400 per week for unemployment. Let's just say a median of $300. And you're getting the federal assistance of $900. Again, I suspect it's going to start next week. The governor's just announced that that will be applied retroactively back to March 15th, so effectively to the point in time at which he issued stay-at-home orders. But that $900 a week is the equivalent of about $45,000 in annual income. $45,000 a year. For many people who work in this economy in Clark County, $45,000 a year is actually a little bit above what they may have been making. That means that this unemployment insurance is going to cover, realistically, the expenses that people who are making at or below the median income level had been making. Now, it doesn't mean that being on unemployment is fun. It doesn't mean it's not, taking away your identity from what you were doing. We're still in significant dislocation. There are strong psychological impacts of being unemployed. But financially, those people who had been making below $45,000 a year are going to be made whole through unemployment insurance for at least 13 weeks. So why do I mention this? Well, underwriting guidelines now from a number of banks, a number of lenders, also look at, just prior to loan closing, somebody's employment status. It used to be, back in the good old days a month ago, verification of employment might take place 10 days prior to a loan close. Now that time is shortened, and if somebody's just been laid off, if somebody's in contract, and while in contract, they end up being laid off, even if their income is being completely replaced with unemployment for 13 weeks, the bank is going to learn this person has become unemployed, and that may again lead to cancellation of the loan application, which may then lead to cancellation of the sales contract. And so another reason that we see these sort of cascading numbers of back on market statistics. And so how high is this? It appears that back on market is actually running a little more than twice what it does historically. There's always some number of deals that collapse and things come back on market. And so I wanted you to know some of the reasons that that's being elevated. These shorter look backs to see whether or not people are employed almost at the last minute before closing, as well as these higher levels of lending standards that banks are putting out there right now while we're seeing some level of challenges in the mortgage market. But transactions have become harder. It's like the environment has been throwing sand into the gears, and it's harder to churn things through the system right now. So if you're looking to sell, be patient. Realize it's transactionally harder right now. If you're looking to buy, be patient. Realize there are harder qualification terms right now, but transactions do continue to occur. So I am Justin Miller with the Chong Miller Group. We help people buy and sell houses. We would love to help you on your real estate adventure. There is still activity taking place. Inventory right now is very tight, and it's not getting looser. If you have a house to sell, please contact us. We would love to help you. We have, before the coronavirus, we actually had engaged in 3 different closed transactions entirely virtually, where our clients were overseas or not in the Las Vegas area. Everything was done online. We certainly have the ability to accommodate that now as well, that other people are starting to do things online. We've already got the experience doing it. If you're a buyer, if you have the capacity to buy right now, meaning you're an essential employee, your income is stable, and you've got decent credit score, contact us. We would love to help you. We can work through the whole process. Again, we can work through it virtually. We can meet with you in person to the extent that you would like to do that, and we can look at properties together. Real estate is an essential service here in Nevada, and so we have the ability to go through that whole process. If your credit scores are a little bit lower or your income is a little bit more tenuous, still please feel free to reach out to us. We have lenders that we do work with who may be very able to help, and we may actually be able to come up with some creative solutions about how to get you into the market as soon as things loosen up, as soon as things start to, in the mortgage space, return to some level of normalcy. So we look forward to helping you. Please, if you're watching this on YouTube, feel free to subscribe to the YouTube channel, and I look forward to talking with you soon. Thank you.